Now let's run through the markets in West Africa, starting with the BRVM. The BRVM 10 index yesterday closing at 217 points. That's down about 0.3%, while the all-share index, which is the BRVM composite, also lost about 1/3%. Moving on to the Ghana market, we saw that market increase only 0.2%. The market, of course, is the leader on the African continent right now. The GSC Composite Index closing at 1,835 points, while the GSC Financial Stock Index closed at 1,618 points, up about 0.4%. The CD currently trading at 1.98 CD to the US dollar. Moving on to Nigeria, we saw the market up about 0.6% to 36,236 points, boosted by gains we saw in the likes of Nestle Nigeria, Total, WAPCO, Guinness, and Julius Berger. Let's now cross to Diamond Bank, where Adegboyega Adebajo, he is head of structured finance and advisory, who will be giving us some views on the Nigerian market. Adegboyega, thank you very much for joining us. I think an interesting place to start is to get your thoughts about the strength of the rally we've seen this year. The market is up 29% year to date, but if you put it in context, compared to where we were last year, the market was up, of course, only I think about 17% or thereabouts. So we are certainly doing better than we did last year. The big question, of course, is are we likely to close this year higher than we did last year?
Thanks. Well, in fact, on a much brighter note, it's about 65% up if you take a 52-week range.
Right.
Yes, it's quite a rally. The prospects are good, but essentially what that means is that there's a lot of confidence coming back into the market. And I expect that some of this confidence, or an increasing proportion of this confidence, is actually with onshore investors. And so we're going to see a lot more happening in the course of the year.
Right. If you can run through a few numbers, of course, MRS reported numbers overnight, and the market will be waking up to those numbers. Not very good numbers. If we look at the Q1 numbers, we're seeing a loss of over 173, no, actually over 200 million naira. So not a good picture at all. Turnover was also down. So it seems that there's some pressure in that industry, and of course that company reflecting that. Your thoughts about that industry right now and the investment opportunities you're seeing?
Well, first of all, let's take a look at MRS. I'm probably not going to blame that entirely on the industry. It's pretty clear that the new acquirers of MRS have actually been struggling to keep pace or to catch up with the other marketers in that area. No doubt there's a lot of investment that needs to be made, and this may be certain reasons why performance is the way it is. From just a mere observational position, you want to look out at the retail end of those companies. We're seeing Fort Oil sprucing up their filling stations, Total sprucing up their filling stations, O&O's doing that. We're yet to see those sort of signs coming out from MRS. So clearly there's a lot that's still going on in there, and it may just be a matter of inefficiencies or management still trying to grasp certain intricacies of the industry. But in general terms, the industry is of course still doing well as it always has been. Consistent demand for the products, diesel, low profile oil. So I do not see the industry being a cause for MRS's performance.
Well, I think a lot of people will argue that given the irregularities of the payment of subsidies, that industry is one under pressure. But let's move on to the banking sector. The banking sector, of course, what we're seeing now is that quite a few banks have announced plans to raise capital. Indeed, some have even closed some transactions. And I think the big question is, do the banks really need the additional capital, given the fact that we haven't seen tremendous loan growth over the last few years? Of course, many of them are still smarting from the losses they made in the 2008-2009 era. So your thoughts about the need for capital and where this capital is likely to be deployed?
Okay, first of all, we're tending towards the date when Basel III has to come into force. And clearly, banks all over the world, not just in Nigeria, need to raise the level of their capital. We've seen so much as what has happened as the shocks. In fact, there's still certain European countries that are yet to fully recover from the impact of the global crisis. But down here, coming back closer home, definitely there's a need to ramp up that capital. A lot of it is done much more easily with Tier 2 capital. We've seen one or two banks that have closed that. We are aware, without too much details being made available, that a few other banks are actually planning on raising Tier 2 capital. And, well, in terms of sectors, the power sector, as we see it now, a lot has happened on the privatization side. There's a great need for debt. There's also a great need to improve on infrastructure for the power sector. And we're going to see a lot of the capital being raised, deployed in that area. Another area is in terms of technology, and technology. I'll probably link technology with communications. It's a growing area, and data is beginning to get much more important in terms of space and use, perhaps than voice, because you can actually do a lot of VoIP these days, which is what's happening. So I see a lot of that capital going into power, into telecom technology and infrastructure, and actually also into physical infrastructure, because we have elections coming up, and I expect a lot of state government projects to also start.
Right, you mentioned Tier 2 capital as the likely strategy here, but what about Tier 1? The prospects of an equity capital raising in this market, given the conditions we're seeing right now. A quick point on that.
Clearly, that is inevitable. However, we need to get some signals in terms of what the feel is for onshore investors. Some offers closed between December last year and April this year. We're yet to get a feedback in terms of how those offers performed, what sort of interest the onshore investors had in those offers. It's a measure, and it tells those who will wish to raise Tier 1 capital what to look out for in the market. I, for one, early in the year was pretty much positive as to a lot of Tier 1 effort being raised.
Okay.